Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Turkey Jerky aficionado, Taylor Riggs counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast partners, Carol Massar and Tim Stenovec, and we welcome in our audiences across Bloomberg Television, Radio, and YouTube here on the final day of the month and the quarter. Stocks right now around the lows of the day, Carol.
Yeah, we're seeing some selling here in the last few minutes of trading. I've been looking at
rebalancing,
right.
Selling.
Well, I know the end of the quarter, right? So it's not a surprise to see that movement. Hey, home builders are what I've been focusing on today. They're down about 4.4% as a group overall. I don't know if you guys saw that story about mortgage rates, highest since 2018. So you're increasingly seeing that take a toll on those home builders. They're down, I think, about 29-30% for the year overall.
Okay, so I've been thinking a lot about the quarter today, and we're down about 4.8% on the S&P 500 quarter to date. But as Carol reminded me earlier, it was a rocky road getting here. We had declines exceeding 13% on the S&P 500, and we're higher now by, 10% from those lows back in February. So
are you an
kind
optimist?
of a rocky road.
Are you an optimist?
I don't know. I just follow the markets. I don't know where they're going.
Well, month on the day, yeah, as you say, up 4% basically, let's call it, on the S&P 500. Similar clawbacks that we saw across on the NASDAQ. So it has been a March to remember, but overall it has been a quarter to remember. And for me, front and center, I know, Taylor, you've been all on the bonds. Commodities, I mean, extraordinary first quarter, and no wonder energy is your outperformer.
And from a lot of our guests saying that we haven't actually seen sort of the best in the commodity run, that if you're not in it, it's not too late to get in it. So certainly at least a few people on this program have talked about sort of the room left to run within that commodity space.
All right, well, we are getting the closing bells here in New York on this Thursday afternoon. Of course, March 31st, 2022, the Dow Jones Industrial Average looks like it's going to finish the day down by about 535 points or so, about 1.5% here. That basically brings its decline for the quarter to about 4.6%. Remember, it actually did finish the month of March higher by about 2%. Similar story for all the other indices, which were higher on the month, lower here on the day and on the quarter. The S&P down 1.5% here on the day, down about 5% on the quarter. The NASDAQ composite down about 1.5% as well on the day. It's going to finish the quarter down by about 9%. And there's your Russell 2000. The Russell 2000 moving lower by 1%, lower on the quarter by 7.8%.
All right, Romaine. So no place to hide, it seems, unless you wanted to jump on board a cruise ship, because Carnival, Norwegian, Royal, Caribbean, all of them gaining in today's session. I'll talk about it a little bit more in my gainers, but they were among the top in the S&P 500, Taylor.
Yeah, really interesting, Carol. When you talk about what's on top, you're not getting a lot of that when it comes to the individual sector levels. For the radio audience, the sector winners, the sector losers, 2 notches down to get sort of a broader base view of what's going on underneath the surface, and not a lot of green, no green, in fact, Carol. But still, there were some, I guess, relative outperformers. Food and beverage, utilities, food and staples, those are flat to off about 0.6%. How defensive does that feel, right? As you're thinking about maybe some of the inflationary pressures. And that's in stark contrast, Carol, to the rotation underway within the S&P 500. Down at the bottom, off about 3% or more. It's semiconductors, it's media, and it's some of these tech and hardware. So you're really getting sort of that rotation out of technology, at least for today.
That's a lot of red. It was a little tough finding some gainers, but here's one. It's a small cap, a micro cap, in fact. About 20% of it is the float is shorted, but it rallied big time. We're talking about Clovis Oncology. It's got a drug for ovarian cancer, and they had a good phase 3 trial result. That stock was up about 23% in today's session. I mentioned the cruise ships, Carnival, Norwegian, Royal, all of them top in the S&P 500. Carnival alone was up about 3.2%. You might remember yesterday, Wells Fargo came out with a note, started coverage on Royal and Norwegian, likes them more than they like Carnival, but nonetheless, we're seeing some gains in today's session. And Datadog, we talk about that often here, top in the NASDAQ 100, saw it moving after hours. They announced a partnership with Microsoft and Azure, and so we've seen some momentum in there. It was up as much as 4%, still by the close, Tim, with a gain of about 1.2%.
Yeah, no trouble finding decliners on a day where only 69 of the 505 stocks in the S&P 500 were actually higher today. Starting with Walgreens Boots Alliance, shares falling 5.7% today. This after the company reported earnings the company's results were actually pretty good on the top line and the bottom line. It was the outlook that left analysts disappointed. They left the outlook for the year unchanged. It suggested that a surge in business that was helped by COVID vaccines and helped by testing is starting to run out of steam. AMD Advanced Micro Devices finishing it down by 8.2%. This after the semiconductor maker was downgraded to equal weight from overweight at Barclays, which said that the growth story, quote, needs a pause. And another downgrade story for a stock moving today, HP Inc. down 6.5%. Morgan Stanley analyst Eric Woodring sees a rising risk of negative hardware budget revisions, hardware earnings revisions, peaking and potential for further multiple compression. Historically, it's led to IT hardware underperformance. So we're seeing shares down for HP Inc. as well.
Analysts giving some reason to be selling today, as we, of course, do see that pressure, that risk aversion just to end the day, the week, the month, the quarter. I mean, at the moment, we're currently seeing risk aversion across the FX space as well. Now, this is as we see perhaps the yen catch a bid. We see the dollar index up about 0.3%. Overall, we've seen in the quarter, of course, yen plumbing the lows of 6-year lows or thereabouts. That more a story of the Bank of Japan, of course, not going to be moving as hawkishly, nowhere near as hawkishly as the likes of the United States, for example. But really, what's being reflected in the foreign currencies with the Norwegian krone off by 2.6% is actually what happened in the commodity space. Now, the Bloomberg Commodity Index on the quarter has had a stellar one, the best one since 1990, up 25%. On the day, we fall more than 6% on WTI crude. We basically level off at about $100 a barrel. Brent crude off by 5.6%. You know why. The big story of the day was really that extraordinary, unprecedented tap into oil reserves here in the United States is going to come onto the market as soon as May. We're going to be pulling out about 1 million barrels per day to be trying to alleviate the price at the pump here in the United States. That, of course, being the inflationary field that, of course, has spoken so much to what's happening in bonds throughout the quarter, throughout the month. And we're currently seeing, though, at the moment, actually a bid globally. Japanese yields actually plummeting. Swiss yields down by 10 basis points. Over in Norway, off by 10 basis points as well. Suddenly, we get a bid for the UK gilts as well, down by 5 basis points. What about in the US, Taylor?
You know, Caroline, kind of a boring day, if you will, to sort of end the quarter. On the daily basis, you actually had a little bit more of that curve flattening that we've been talking a lot about in the last few weeks, but really when you're looking at the 2s and the 5s not doing much. You are seeing bonds catch a little bit of a bid further out. That's bond price higher, yield lower by about 2 to 3 basis points on the day. But the real sort of superlatives come in, Carol, when we talk about how far we've come for the quarter, the huge rate of change, and then what this means for the world of equities. If there's already been that big repricing, given 160 basis point moves already in the 2-year yield, and what that's pricing in for a Federal Reserve that may or may not be behind the curve.
Yeah, listen, this is right, this conversation, this bigger, broader conversation, we step back, right, and trying to figure out, so maybe the bond market is starting to settle down. Maybe we found our highs when it comes to some of the yields. In terms of the equity markets, guys, I mean, I feel like there's still a very strong debate about whether or not we've bottomed out, whether there's opportunity at this point. Yeah. And I feel like that's kind of the churn right there.
Yeah, I mean, you think we found the highs on the yields? I mean, we still got to wait. Well, okay. I mean, we got a long way to go. I mean, you got a lot of Fed members now rattling the saber, seeming to talk about that we should be closer to 3% by the time we get to the end of the year. But there's a gap there, right, with those projections. Yeah, there's a huge gap, and we know there's not agreement, and we know that there are a lot can change with regards to the economic data that can steer them off course. But when you look at sort of what's moved over the last few months, I mean, just look at what moved this quarter. The top 20 gainers in the S&P 500 this quarter, they're all either energy or commodity related. That's it. That's it.
Caroline, to the downside, it was
you
a
like
lot
utilities, Carol?
Do I like utilities?
Yeah.
I like when my utilities are on and I get hot water and electricity.
It was a lot of the pandemic winners in technology, Caroline, to the downside.
You know, you have
this
jerk
quarter
chicken upstairs.
Everybody's been running. Tim has been dying for somebody to go get him some.
Yeah, Romaine walked by our studio with a bowl of something, and I didn't know what it was.
Now.
Yeah.
I tried to give some to Taylor, but she.
It was weird. You only were carrying one, not one for everybody.
It's going to be, you know, guys, it's going to be tricky, though. I really, you know, now again, we're counting down again to earnings and the Fed meeting, right?
Yeah.
Like, what do we get in terms of rich thought about maybe how the rest of the year plays out, Caroline?
And lest we forget, a war happening in Europe, of which we haven't seen in decades, between Russia and Ukraine, what that means for commodity prices, what that means, of course, from a humanitarian perspective, first and foremost, but also what this means in terms of the ongoing narrative on gas prices, on the flight to safety, on whether you want to be in emerging markets or not. It's an extraordinary story that really has pushed and pulled and dictated the entire month of March.
Well, it is really interesting because we spoke to Jimmy Lee from the Wealth Consulting Group in Las Vegas just a few minutes ago about $5 billion in assets under management. And he said that they're not changing their outlook at all as a result of Russia's invasion of Ukraine, which I found pretty surprising.
And I'm glad you brought up emerging markets, Caroline, because we talk about the declines here in the U.S., but it's been really pronounced here for a lot of the emerging market stocks here. I mean, we've had now basically 3 straight quarters of declines. Remember, it was just a few months ago, everyone was talking about this could be kind of the resurgence for a lot of these EM stocks. But of course, with all the ructions in the commodity space and now the war in Ukraine, that's at least being put on hold for right now.
You know what's interesting? The MSCI Emerging Markets Index down. How much do you think, Romaine, this year?
This year?
Yeah.
I don't know, 18%.
7.4%.
Oh, okay, there you go.
At least that's one index, right?
Yeah.
But we know it's a little bit different. Anyway, all right. That's going to do it. Tomorrow's the big jobs report. We'll have lots to talk about, certainly tomorrow. All right, guys, we got to run. That'll do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We'll be back same time, same place tomorrow.